Armada Hoffler Properties, stock ticker AHH, is one of the most interesting REITs on the market right now. If we look at the last year, they're down nearly 40%. And what's interesting is if we look at the rating summary, we have Seeking Alpha analysts giving it a buy rating, Wall Street a buy rating, but the quant is giving it a strong sell rating. So we're seeing a lot of diversion when it comes to sentiment around the stock, and that's understandable again. The stock is down about 39% in the last year. Now, one of the big reasons for this is this REIT recently reduced its dividend by around 32%. So obviously, if you're holding a stock, that's never something that you want to hear. But if we take a closer look with what's actually going on with this REIT, you'll see why I think you should actually keep this on your watch list. Now, to start off, if you've never heard of Armada Hoffler Properties, what is this REIT? What do they do? Well, if we look at their investor relations page, they state they're a vertically integrated self-managed real estate investment trust with over 4 decades of experience developing, building, acquiring, and managing high-quality office, retail, and multifamily properties located primarily in the Mid-Atlantic and Southeastern United States. So right from the get-go, we can see this is not your typical REIT. And in fact, this is exactly what I was writing about over on Dividendology.com just the other day. Every month, I put out a list of undervalued dividend stocks, and AHH was one of the stocks that I featured. Here we can see where I was writing about Armada Hoffler Properties, and if we scroll down, I basically point out exactly what they just stated. Armada Hoffler Properties doesn't just buy buildings and collect rent. They develop them from the ground up, very often for themselves, but every now and then for other companies as well. And this strategy gives them one potential advantage over their peers. It allows them to own top-tier assets at below market cost, and it also provides them with flexibility because in strong markets, Armada Hoffler can develop and retain high-quality properties at below market cost, like I mentioned above, and this captures both development profits and long-term rental income. But in weak markets, instead of acquiring buildings, Armada Hoffler can generate revenue by building projects for other companies, which at times can help them stay profitable. So now you might be wondering, okay, why did they cut the dividend by 32% then? Well, let's get a better understanding of what was actually going on. If we jump over to the dividend breakdown sheet and look at AHH, and what we can see is an interesting dividend history. They were growing the dividend and then 2020 hit and cut it, started growing the dividend again, but we recently just saw the dividend cut. Now, when it comes to these REITs, again, we don't pay attention to the payout ratio because that's based off earnings. When it comes to REITs, we pay attention to the AFFO payout ratio. How much are they generating in adjusted funds from operations versus how much are they paying out in dividends? So, for example, if we jump over to the financials here on Seeking Alpha, let's scroll down and look at this adjusted funds from operations on a per share basis. Again, we look at it on a per share basis because REITs dilute themselves in order to raise capital in order to be able to grow. And we can see in 2024, they generated about 93 cents in adjusted funds from operations. Keep that number in mind, 93 cents. If we look at the dividend history for this REIT, we can see in 2024, they paid out about 82 cents. So this is interesting. That dividend was actually covered by adjusted funds from operations. But there was a problem with this that management was not comfortable with. Before the dividend cut, AHH was having to rely on fee income from its construction business along with rental income to cover the dividend. Ideally, rental income by itself would cover the dividend. That's because the construction business can be so volatile. But management noted they made this dividend cut because the payout is now fully covered by property income without any consideration of fee income. This is a big deal for the REIT, and this puts them in a much healthier position. If we look at that AFFO forward-looking payout ratio now, it's sitting at just 74.54%, which is in line with other REITs like Realty Income, Vici Properties, REITs you're probably familiar with. And so now that they have a much healthier payout ratio that's completely covered by rental income, we can still see that starting dividend yield on a forward-looking basis is above 8%. That's a very high starting dividend yield. But here's what's even more interesting about this REIT. Obviously, sentiment is down considerably. We have the huge sell-off. We have the dividend cut. But look at what's been going on with insiders over the past few months. Again, I highlighted this over on Dividendology.com, but insider buying has ramped up significantly. So far in 2025, we've already seen 8 insider purchases from Armada Hoffler Properties. And again, they're buying these shares when the REIT is at its lowest price that it's seen in the last decade. And after these insider purchases, insiders now own an estimated 10.2% of the business. And this is something I love to see because historically speaking, stocks with heavy insider ownership have historically outperformed. So those are certainly all interesting key points for AHH, but that still doesn't tell the full picture. So let's dive into this just a little bit more and look at their investors presentation. To start off, we can see the portfolio consists of mixed-use ecosystem, meaning multifamily plus retail plus office, so it's a bit of a conglomeration, and they do have some grocery-anchored shopping centers in the Mid-Atlantic and Southeast markets. So the vast majority is going to be mixed use, coming in at about 59%, grocery anchored at about 25%, and multifamily at 13.5%, and then office is quite small at about 1.9%. The good news is stabilized occupancy is about 96%. But something else we do have to make note of is the credit rating. Credit rating is sitting at BBB. While this is considered investment grade, it is below some of the other REITs that I like Realty Income and Vici Properties. So because they're still investment grade, it does still allow them to borrow at lower interest rates. And it does mean that the credit agencies believe that they have adequate capital to meet the financial commitments they've made. But again, still a little bit lower than REITs that I typically invest in. But now we have to talk about the balance sheet. This is where management admits they're still not where they quite want to be. There's good parts. For example, 100% of their debt is either fixed rate or hedged against interest rate increases, which obviously greatly reduces the exposure to rising rates. And then we can see their weighted average interest rate is about 4.2%, which is relatively low for today's REIT environment. But one of the things we can see is their long-term debt ratio target is about 5.5x to 6.5x. They're quite a bit above this right now. And a large part of this is, you can see in the fine print, they're self-funding their development pipeline, which means they're not issuing as much equity to fund projects. So Armada Hoffler Properties is a very interesting REIT, and the valuation makes them even more interesting. If we go ahead and jump over to our REIT valuation spreadsheet from tickerdata.com, we'll plug in AHH, and all the data will load in. And like always, if you'd like to download any of these spreadsheets and get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But there's one valuation model in particular that I want to pay close attention to when it comes to AHH, because the multiples is kind of weird. They don't have a lot of good comparables. The historical price to AFFO doesn't make as much sense in their case. But what about this dividend discount model? Here's what's so interesting. To start off, we have to remember they did just cut their dividend. We can see the forward dividend payout is $0.56 per share. So if we go ahead and manually plug that in, 0.56. And here's what's interesting. If we just assume 1% dividend growth moving forward, we can see this rate would be worth $7.54 per share, which gives it about 9 to 8% upside from its current share price. Only assuming 1% dividend growth. And again, they just had that huge dividend cut in order to make that dividend more sustainable, in order to make the dividend growth rates more sustainable. And even more importantly, the payout is now fully covered by property income without any consideration of fee income. And with the AFFO payout ratio now in a much healthier position, I do think dividend growth rates of above 1% is certainly possible. If they can achieve 2%, all of a sudden the REIT is worth about $8.80, which would give them 26% upside. So this is a REIT in the market that's currently way out of favor. And obviously the dividend cut didn't help with investor sentiment. But this certainly did put the REIT in a much healthier position moving forward. And it looks like the sell-off may have been a bit overstated. Again, there's still certainly some risk with the business, such as the fact they're a little bit over-leveraged on the balance sheet right now. But I do think Armada Hoffler Properties definitely deserves a place on your watch list. It's a little bit of a more aggressive income play, but it's one that I think may pay off. Go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. And if you want more in-depth analysis on these types of REITs, then be sure to check out dividendology.com at the link in the description. And like always, if you'd like to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.